Welcome back to the Trader Vision 2020 video tutorial series. My name's Ed Carter. I'm the architect behind Trader Vision, and today's session will cover planning a trade. Specifically, what we'll cover is what makes a good trade plan. We'll go through a few examples, and then we'll talk about what comes next. So what does make a good trade plan? Well, at a minimum, it requires a reason to enter. It requires the entry, stop, and target prices that you'll be using for the trade. Then it requires an analysis of the overall reward, the total risk being taken, and then the ratio of the reward to the risk for an analysis of that trade. And finally, you have to measure all of these things against the goals and overall market conditions that you're trading into and trading against. So with that said, let's look at some examples we'll be covering today. Bear in mind it's been a rough market, and this is being recorded at a time coming off a 2.5% down day by the market. We'll look at the ticker TCAP, at Pandora, at ACHC, and then finally at ABCB. That said, let's go ahead and get started. We'll start first with the Triangle Capital TCAP chart. And we can see here that we've got a rounded bottom breakout pattern. We've had a nice run for more or less a month, and then we've had a pullback the last few days. I've dropped the fibs on here as a guideline. I've also dropped in a few lines based off a weekly chart. Let me readjust. Here we go. Readjust some size. You can see that we've got potential support there. Off the daily level, we had some support here. We've got potential resistance up in there and here, and then on back here we can also see the resistance levels and support levels that caused me to drop in these lines. It's really not so important that you agree with the lines that I drew. It's the process that we're going to go through that we need to cover. So let's just say, for argument's sake, that this is the trade plan we want to consider. What will that plan look like? Well, we might have two possibilities. If we got a entry signal down here and we're thinking that we're going to find support off of the 23.6 retracement of this run, we could be looking for an entry down here. If we did that, the run up to the next high, let's just draw a line in here. The run up to the next high is let's just say that we got an entry there on some sort of signal. We would be looking at only about a 2% run up into this potential resistance at this previous high. So for my particular trading taste, I'm going to wait for a breakout here, and in particular of breakout and then retest to prove that that is in fact support. At that point, I'm going to put a stop as tight as I can, and it will depend on basically volatility, what the average ATR is as to where I put my stop. I'm going to put, I'm going to put my first target up here where that weekly support and resistance line comes very close to the, within 3 cents of the 38.2 extension of Fibonacci extension there. I'm going to put my second target up in here between the 61.8 and that 1189 support resistance level I put in, and I'll probably put in a third target up here where the 100% extension lines up with this weekly level that I had drawn in there. And that's in a nice gap that we've got to fill, although the last line is a bit into the close of that gap. But let's just assume that these numbers are pretty close, and let's do a trade plan here in Trade Vision. So let's first put in the ticker, TCAP, and you'll note that this whole process kind of lines up somewhat with what we talked about earlier on validating trades. It's an extension of that. It's basically working through the scenarios that we have to come up with whether or not we can put together a good trade. You can see in this case we've got 4 bullish factors and 2 bearish factors. The 2 bearish factors are the most recent market, short-term market trend, and the long-term trend of this particular ticker. Because it is a rounded bottom breakout, by definition that means that it's a rounding bottom, and therefore it's been in a downtrend and has now started to break back up. You can see that we've got a bullish hammer signal and that we've got that rounded bottom breakout and some other potential signals there for us. Let's go ahead and use 1 entry and 3 exits as our trade plan. And let's just say that we're going to enter here about 1089. That is about a nickel above this previous high. So let's just use that. Again, you adjust this to however you would trade. And our stop we're going to put down here someplace like 1064. With our first target up here about 1140, what? 1142? That's good enough. The second one up here about 1185. And the third one up here about 1240. 1238, 1239, okay, fine. We'll just say 1238. To stay at less than $250 risk, we can buy 960 shares. But I know with this particular account, let's call that $11, that's going to be way too many shares to stay with reasonable size. So let's just cut that down to 500 shares. Let's see what that does for us. With that scenario, we're still going to trade 10% of this account, but for the moment, I'm going to say that that's okay. I would certainly cut that down significantly during a normal trade, but for explanation purposes, this will work. So let's say that part of our trade plan is then to take, let's say 200 shares at the first target and another 200 shares at that second target and the final 100 shares at that third target. Let's look what that does for us. Under this plan, we're making $100, $99 at this first target, which is basically the 38.2 extension and a weekly support and resistance level. If we had set up trade goals for this account, we would have a goal of, perhaps $200-300 that we needed to make. And so we would have to consider, is it possible for us to reorganize this so that we can make our goal at the first target? I don't think that it's going to be possible. It just does not seem feasible. Even if we were to take this number all the way to 500, let's just delete these and make this 500. Well, we're making $255 there, but it's only 4.6%. And is that really worth it? We're still getting less than 2 to 1 between the risk that we're taking between the entry and the stop and the gain we're making between the entry and that first target. So we've got to make a decision about this trade. We can work some scenarios. We can, maybe go 300 here and 100 at each of these. Let's try that again, 100. And that, that would give us an overall trade of 7%. And if our goal was $250, we wouldn't quite make it at that second trade. So we might, or at that second target, we might in fact need to play with this plan some more, doing different scenarios until we find, based on reasonable targets, what organization or what trade plan, shares at what price, is going to get us to the trade goal that we have set, because that's the job of a trader, is to achieve that goal on every trade. It is not to hit the home run every once in a while. We're working for consistency and profitability here. So we'd have to play with these numbers. Perhaps we could make this 50 and 50 and make this one 400. That gets us 200 at the first target here. And that might work. That might get us closer to a workable plan. The idea is that we would continue to play with these numbers, including, in this case, I can't see us raising the number of shares we're in because of this particular account size. This is a $50,000 account. However, theoretically, we could, if we had a larger account and this was not a large percentage of it, we could add shares or just reorganize which targets we're adding what number of shares at, or what number of shares we're taking profit at each target. And we come up with this so that we have a good enough reward to risk, as we talked about in the last video. We have a small enough risk to the loss if we are stopped out, and we have a good enough overall reward to reach our trade goal. And we play with those numbers in there. So that's the first example. Let's see if we can't work another one here. Let's do Pandora. Okay, let's move this up. Pandora's been on quite a run here for, since the low on January 22nd up to the high on Friday the 2nd of February. That was like a 32% run up. So it's been on a tear. It's now broken above the 50 and it's into rounded bottom breakout territory. You can see I've already dropped in a number of lines based off of the daily and weekly charts. I'll just go to the weekly so that you can see where these numbers came from, or where these lines came from. And even on the monthly, you can see that they line up fairly decently. So let's go back here to the daily now. While we've had this long extension, it's time clearly to take a little bit of profits. After a 32% run up, the market wants to take a little bit of profit, particularly when the overall market is down. So we're expecting a pullback, perhaps a pullback to this this support level. In fact, let's drop in the Fibonacci's to see if that kind of lines up with a 38.2% retracement. So if it does in fact pull back to there, there's more than one group of traders looking at that level. And we might be able to find a signal there. If we were to get a signal down in this area, and we were trading for the first potential resistance, we'd be looking at about 5.25% up to this resistance level here, or something more in the neighborhood of 8% up to this previous high, or 12.5% up to this shelf created by these two highs here, or these two body highs, I should say. So let's see if we can't put together a trade plan for that. Again, I'm going to reduce This time I'm just going to say $200 worth of risk to the stop is what I'm willing to take. We see this one is much more iffy right off the bat. We see we've got 3 bullish and 3 bearish conditions. The overall market long term is very bullish. In the short term, it's bearish. The symbol itself is long-term bearish, as would be the case in most rounded bottom breakouts. But in the short term, it's very bullish. The 8 EMA is actually below the 34 EMA, so that's bearish signal. We got plenty of liquidity, and we've got no true candle signal, although this is very, very close to being a shooting star, which would be bearish. We've got the rounded bottom breakout, which is bullish, and so we've got that bullish pattern going for us. Let's see what we can do with a trade plan here. Let's say that we were looking at, well, first we'll look at what if we got about a 495. We could see a little bit more of a pullback here inside this big candle, but we find support down here where this support and resistance level more or less lines up with the 38.2 extension level, or retracement level, I should say. Let's say that we could get an entry in here about, 495, 496. Let's see what that would do for us. And if that is support, we're getting a bullish signal off of that. We can put a stop tight below that. So let's say that we're going to put 487 as our stop level. That's a very tight stop. In fact, let's just call it 485 for argument's sake. If we trade it up to this 524, and again, normally I would put a number slightly, whoops, wrong field, slightly less than this, but for demonstration purposes, let's just use that 524. This previous high is 539. Let's do some scenarios on that as well. And then that first support and resistance up here is about 559. So let's see if it's possible to plan a trade here. First of all, it says we can trade 1,700 shares to still have a $200 risk. But I think that's going to be too much for this account. So let's look at 1,000 shares, see what that does for us. It's probably still too much. Yeah, it's almost 10% of this account, so let's knock it down to 500 shares, see what that does. Okay, still a little bit large, but we'll just go with it for now. What happens if we were to take 100 shares at 5.25? Well, that's only 22 bucks. There's no sense in even trading that if we think we're going to get resistance here at this first resistance level. If we're going to get resistance here, it makes no sense to take this trade down here. We're just not enough, not enough upside to make that trade worthwhile. If we thought, well, there's not going to be any resistance here, we're going to, for some reason, we don't think this previous resistance here is going to hold up. And it is going to run up to this previous high, which has been resistance up in here as well. What would that do for us? If it's going to run up into there, that's almost 8%. And if we could have avoided that and taken 300 here, we can make 120 bucks. And if we take the last 200 up at this first resistance off the weekly chart, that's almost 12%, but still, we're only talking about $240 overall. So does this trade make sense? In my mind, it doesn't. In fact, I'm probably going to be looking at this trade and saying, well, what could I do with this trade? I could wait and perhaps look for an entry once we break this level, so that my first target is going to be 6.5% above, and the second target then is going to be clear up here at almost 20%. That's going to be a lot better trade. No guarantee that we'll get it, but it would be a lot better trade. So if I could get an entry, let's say about 560, with a stop 540. That's 540. That's 539. So let's call 540, whatever. And the first target then of 599, but a second target of 676. That might well do it. If we got 200 shares at that first target, we're making 71 bucks, but the real money is being made up here to the second target. So it all comes down to a trade plan. We've got a single point there that is our resistance. Can we look past that? You might be able to justify not taking your profits there, or taking a smaller amount of profits there. So perhaps you take, actually I'm probably going to, personally I'm going to stick with this plan. Overall that would be 411 bucks. But if you wanted to, you could do the scenarios and say, well, if I make it 100 shares there and I take 400 shares here, we're talking about almost $500 profit that we can take out of this trade, just up to this level here, entering in here. So that's another way that we can plan this trade. And the whole process of trade planning is working various scenarios with these numbers and with the chart to come up with both a realistic, based on true support and resistance, or Fibonacci's, or however else that you plan, where is a logical place to take profits, logical targets, with relationship to what is a logical place to place your stop, and how you can play with the shares taken at each level to get yourself above your trade goal as quickly as possible, and still maintain a good enough risk to reward ratio to make the trade worthwhile. It's more of an art than a science. You have to learn to play with the scenarios without getting unrealistic. You have to learn that maybe this is too many shares. Maybe I need to drop this to 400 shares. Maybe I need to take all 400 at the first exit, or maybe I only need to take, since that is 1 point of potential resistance there, I can look past that and I take 0 shares at that 599, and I take all of them at that 676. Just play with the different scenarios until you come up with a plan that seems reasonable for your level of conservatism or aggression, and is a well thought through plan. Let's do another example. ACHC. Okay, let's drop back here. ACHC is again another one of those rounded bottom breakouts where we have the 50 now turning up. It is broken above the 50. There's still plenty of room up to the 200% there. We've got 20% up to the 200%. And we've been in a nice trend here since the end of, the first half of December anyway. Friday was somewhat of a down day, just some profit taking after a large bullish engulfing signal on Thursday. Breaking out of this previous sets of highs here, we've now pulled back to take a little profit there. But again, we tested this uptrend and bounced up off of that as well. So let's see what we could do to plan a trade there. Personally, I would be looking for something like some sort of, let's try that again, some sort of signal that the bulls have stepped in. So I'm looking for something to buy in about there. I'm looking to put my stop in someplace down here below this level. Right now the volatility stop tells me that it's at 33.80. So it's down, way down in here. But if this proves to be support, in other words, we close above it and retest and hold that level, then I can use a much tighter stop. That's what I would be looking for here. That would be my signal to enter. I would then be looking to take profits. Let's just do this. Take profits someplace up in here, someplace up in here, and theoretically someplace up in here, filling that gap. So let's look what the trade plan would look like. So to create the trade plan, first we put in ACHC. And again, I'm going to lower. I'm a little more nervous about the market because of the recent downturn. So let's put in a $200 risk to the stop. That's all I'm willing to take. We tell us that we've got 5 bullish factors, but 2 bearish factors. The long-term market, the long-term symbol, and the 80 EMA or T line versus the 34 EMA are all bullish. So is the short-term bias of the stock. So is the patterns, where we have a rounded bottom breakout and kind of a J-hook type setup. We've got plenty of liquidity. We do have a bearish Harami signal here on Friday. And again, we have that short-term downtrend of the market going against us. But let's look at, again, I'm going to do 3. You do what works for you. If it's 1 entry and 1 exit, or 1 entry and 2 exits, or whatever. You do that plan that works for you, but the process is what we're trying to learn here. Let's say that we've got an entry about 35.10. And our stop is down here about 34.44. Let's call it 34.45. Try that again, 34.45. With our first target up here about 37.45. Why not? And the second one about 39.45. And the third one up here at 41.50. Okay. To keep $200 of risk maximum, we can buy almost 300 shares. But again, based on the size of this account, I know that's going to be way too much. Let's see what we can do with just 100 shares. It's still 7% of this $50,000 account, but let's just go with it for the moment. So let's say that we were to take 50 shares at that first target. What would that do for us? It would give us 6.25% and 110 bucks. 25 shares at that second target would give us 11 2/3% and another 100 bucks. And 25 shares here at that third target, way up here, is going to give us 17.5% for 150 more bucks, total of 366. So if our goal was just $250 for argument's sake, perhaps we want to play with this some more. Maybe we want to say 75 shares there, nothing at that second target. What does that do for us? Well, it keeps us about the same overall, but it gets us 165 bucks, 167.50 actually, off the table here earlier. Gets us closer to our trade, makes it a positive trade more quickly, and gets us closer to our goal. Possibly that's not good enough for us, and so we want to change this to what happens if we take all 100. Well, we can get 225. that's maybe not enough for our goal, and so possibly we want to pass on this trade altogether. You'll just have to play with these numbers and see what you can do in various scenarios to get your goal off of the table as quickly as possible while giving yourself something to ride in case the trade continues to work for you. And of course, you're moving your stop up as the trade goes along. But that's the trade planning process. Again, it's an extension of the validation we did in the last video. Even taking it all at one exit, we still have a 3-to-1 risk reward if in fact this is a logical place. Again, I'm looking for a close above this level and then a retest and bounce up off of it, triggering the buy. And that makes this proven support, and that makes a tight stop below that more reasonable. In fact, I might go so far as to raise it up a little bit there, which would take it up to, let's call it 34.60. And again, that's part of the planning process. Doing that considerably raises the risk reward. It doesn't really change the amount of reward we get, but it reduces our risk. So again, these are the factors that we need to go through. And you'll have to forgive me that some of these numbers aren't filled out, but it's all predicated on the goal over here, which we have not set yet for this account. So let's see if we can't save, well, it's already saved, but let's close that one and look for our next example, which is ABCB. Okay, ABCB, let's pull this down. I believe this is a regional bank and we're more or less close to all-time highs. Let's look on a weekly chart and a monthly chart. Yes, we are at all-time highs. So here's our all-time high. I've drawn the fibs off of this, and you can see that right here is a shelf that I considered to be potential support, and that lines up very tightly to the 38.2 Fibonacci retracement. We've got a nice bullish candle here on Thursday, and then on Friday we had a doji, kind of a doji. I'm not thrilled about the high wick, but it's possible we could get a doji continuation pattern or signal or something of that nature on Monday. So I would be looking at two potential scenarios. One would be a purchase above the 23.6 fib line, fib retracement, showing me that it has in fact bottomed out and is looking to go up, in which case I've only got about 3% until I run into the previous high. Or alternatively, I would be looking for a potential to get into a trade up here, looking for a run up to the 38.2, which is 5.5%, the 61.8, which is 9.25%, and then the 100% extension, which is 15%. That's probably what I would be looking to lay out. Because I'm not interested in a 3% trade, I would rather have the security of knowing we closed above this breakout level, retested it to prove that it is support. I can put a tight stop below and look for the fib extensions to act as my target levels. In fact, let's just draw this all in. So I'm looking at a potential entry someplace in here after this is proven to be support, so I can put a tight stop. My first target is going to be that 38.2 extension, then the 61.8 extension, and finally the 100% extension. All kind of following in line with this trend here. Let's just draw that like that. All kind of falling in line with that trend. So let's put this one over here, that one's in the center, and that one's like that. So that's what I would be looking at. So the J hook has now concluded or broken out, retested, and taking off. That's the kind of trade I would be looking for in this particular trade. Let's open it up here. A, B, C, B. Again, because of the overall market, I'm going to take a smaller percentage of risk. So we're looking for an entry. Yeah, let's call it 57.25. And our stop 56, and let's call it 30. For the first target up here, about, let's move it over so I can see with the extension. So it's, let's call it 60.25. Second target up here, about 62.35. And the final target up here, about 65.80. Would help if I could type. Now it says we can get 200 shares to stay below our $200 risk. I know that's way too much. Just for argument's sake, let's just try 90 shares. I think it's still going to be way too much. It is, but let's just say that we had a large enough account that that was reasonable. Let's see what happens if we split these shares equally, exiting 30 shares at each target. Well, we make 83 bucks at the first target. I guess it would 65.80. That's better. Okay, so $83 at the first target, which is less than 5%. At the second target, we're making 146, which is 8.5%. And then if we could make it all the way to that third target, a 100% extension of this previous run, that would give us $250. So more or less, if we can get the first two targets, we would reach our goal if our goal was $250. And so that's a pretty good setup there. However, can we improve that? Well, I think beyond this first extension is probably more likely. So let's reduce what we take here. I want to take something, but let's take just 20 shares there. And let's say that we take 40 shares at the second target. Yeah, 40, okay. That raises our overall reward. So if we hit all three targets, we're up over 500 bucks now, making it a 9.7% overall trade. But it also allows us to get our target here, the 250 bucks, a little bit more comfortably at that first or at that second target level. We can play with it some more. We could reduce this, even further. Take it down to 10 shares here. And maybe make this 45 and make this 35. What does that do for us? Well, it's almost not worth taking 10 shares off here because we're only making $24.50. And if we think that's a reasonable target, which I think a 38.2 extension of the previous run is reasonable, we probably need to take more off the table here at that first target, even though it's only 4.25%. But if we were to play with this scenario, we could see that we can raise the overall take, but again, that's the assumption that we make it clear up here to a 100% extension. So we'll have to make some strong considerations here. Maybe drop this down to 25 and make this 55. in that case, we make $300 basically at this second target under this scenario. We still have some to ride in case we do hit that home run. And again, we're taking $24.50 off of this first target, which isn't hardly worth the trouble, but it's something you can play with. Again, this is in the process of working the scenarios so that we can distribute our shares appropriately, figure out where we're going to put our orders to take our profits, and then stop letting emotions run wild during the trade. By having these levels preset and orders preset, we can take a lot of the emotional stress out of our decision making and improve the quality of the decisions we make. Okay, that's it, this video. In our next video, we will be covering executing a trade and managing a trade. And I look forward to talking to you then. Until then, if you need to reach me for any reason, you can always reach me at ed@tradervision2020.com or support@tradervision2020.com, or through the application, you click on Help, Submit Support Ticket, and that will also notify me of your question. Again, I thank you for your time, and I look forward to talking to you in the next video.